Welcome back. The 4 steps to anticipate a sell in trading. Number 1, you find the liquidity sweep on the higher time frame. Find the liquidity on the higher time frame. Then number 2, mark the first break of structure. Mark the first break of structure. Number 3, trace the first break of structure's high right here. Then number 4, the last one, set a sell order on the first break of structure's high. Stop loss on the stronger high created after the higher time frame sweep of liquidity. Let's put these ones into perspective with a chart on Gbpjpy. Now, the first step we said is find the liquidity sweep on the higher time frame. Right before you is a chart for Gbpjpy on the monthly time frame, whereby it is a very clear chart, has no any markings on it, no lipstick on it, and we are saying we want to anticipate a sell. We always anticipate a sell from the higher time frames as we drop down on the smaller time frames, right? So this one was on the monthly time frame, where we said point number 1. Step number 1 is that find the liquidity sweep on the higher time frame. So here we are on the monthly, right? And the clearest sweep of liquidity that you can see right here is this guy, right here. See this consolidation right here. I love consolidation so much. Why? Because consolidations usually means that there is a form of time distortion, right? There's the market is trying to build volumes before it rallies. See, this consolidation happened here, and the market rallied, dropped down crazily. So step number 1 said the sweep of liquidity, which you have here, sweep of liquidity, a very clear one. The second point is we said the second step. Mark the first break of structure, right? After the sweep of liquidity, and then we mark the first break of structure, the clearest one. Of course, in this monthly time frame, the first break of structure after this liquidity sweep is not that very clear, but it is around this guy here. This round here. I'm gonna drop down on the daily time frame, and you'll see the way this first break of structure is clear. Then step number 3 says trace the first break of structures high, right? This first break of structures high. Then step number 4, set a sell order on the first break of structures high. So we trace this high, and that's where we set our sell order, and then the stop loss on the stronger high created after the higher time frames liquidity sweep. This is what we mean: a sweep of liquidity, then a first break of structure, and then its high. Say trace its high, which is right here. This is the guy where we're supposed to set our sell order and to potentially move down. Say stop loss above this guy here, this guy around above here, right? Let's move to the next slide, where you can see a little bit lipstick on the chart. This is it. This is all what we are trying to mark on that clean chart. Still, we are on the monthly time frame. I said a liquidity sweep right here, creating this stronger high, where we set our stop loss, and then we roll it down, first break of structure, which is around here. I'm gonna drop down on the lower time frame, and you'll see a very clear first break of structure. It's high right here. This is where we said we set our sell order, and rally the market, ride the market downwards, which just happened here. Set your sell order here, and the market sells off. Let's drop down on the lower time frame and see the clear break of structure. Now this one now is on the weekly time frame. We were on the monthly, and we can see the liquidity that was swept was right here. This is the first leg. Its first break of structure, the clearest one we can all see with our eyes wide open. This guy here. This is the first break of structure. Then its high, which is right here. This is where we set our sell order and ride the market downwards. Let's see what happened up front right here, right? This is exactly what happened on the weekly. See, the way the first break of structure's high was mitigated right here. It was just swept and the market dropped down like crazy. As simple as that. The 4 steps. Number 1, find the liquidity sweep on the higher time frame, as we just saw. Number 2, mark the first break of structure. Number 3, trace the first break of structure's high. Set a sell order on the first break of structure's high. Sell a stop loss on the strong high created after the sweep, after the higher time frame sweep of liquidity. Yes, it was as simple as that. And see, all these 4 steps is summarized by this bearish version of the standard trading model that we have been discussing all along since the beginning of this channel, where we said we need a sweep of liquidity. That's step number 1. Step number 2, first leg, this first leg, right? The first break of structure, which is right here. This first break of structure, then its high. When we see this first break of structure, we trace back its high. This high, this is where we set our sell order, right? Our stop loss right above here, because after the sweep of this liquidity, this guy becomes a stronger high, and set our sell order here and ride the market, potentially taking our profits at this lower low. But always trace, but you can always take partials at the nearest liquidities right here. That is it. But this market decides to go off and take this high, then well and good. We are off. Losses are inevitable in trading. But we should trust this model. It works like magic. It is as simple as that. It was as simple as that, right? This guy here. Liquidity sweep on the higher time frame, this guy here. First break of structure, this one I've done not good. First break of structure, which happened right here. See, all this first leg, first break of structure happened here. Then its high, which is here, is this guy here. You sell off and target this lower low, but you can always take partial to near liquidity. As simple as that. And thank you so much for watching. If you like this kind of content, if you have any question from what I've just talked about, you can put a comment down below there. I'm gonna reply. And if you're new, you can always subscribe to the channel and check out what we have been discussing all along since the beginning of this channel, because this is the place we keep everything as simple as this, what you just seen, what we just broke down here. Thank you so much and take care. See you in the next video.